The situation's like this. America cannot make artillery shells fast enough. We can't sell Tomahawk missiles to Denmark because there's a 5-year backlog. And to make matters worse, 90% of all of the machine shop owners in the US are dudes in their 60s that are getting ready to retire. What are we going to do about this? Silicon Valley thinks that the solution is a $1.6 billion startup run by a young CEO that's been around for just 5 years. Before we get skeptical about Hadrian, let's be real. The defense manufacturing base is in trouble. The manufacturing crisis is not fake, and a lot of it has become a monopoly. In just the past 30 years, since 1990, the number of aerospace and defense primes dropped from 51 to just 5. Today, 90% of missiles come from just 3 sources. That is fragile. And I didn't pull that 90% statistic in the intro out of my butt. That's true. 90% of machine shops have fewer than 20 employees, and the average operator, get this, is 63 years old. An average precision part, a lot goes into this, takes 8 to 12 weeks to deliver, and about 40% of orders are either late or have manufacturing defects. And whatever your thoughts are on the current conflicts going on that the US is involved with, they have exposed a huge vulnerability for us, that just-in-time manufacturing, i.e. waiting until demand crops up and then making the equipment, the ordnance on demand, does not work out. We are too fragile to do that now. It was a peacetime fantasy. So here comes Chris Power, an Australian who came to the US in 2019 with just $6,000 and a thesis that America's industrial base was collapsing. What did he do? He started a private equity fund that started buying up machine shops. But after doing this for a while, he gets blackpilled really quickly and realizes that this is a huge problem. These guys are retiring. New people are not going into this. The production process is flawed. It creates errors. And he decides we should automate a bunch of this with robots. So he founds Hadrian in the year 2020. And the pitch is visionary or ludicrous. They want to produce space and industrial manufactured components for defense 10 times faster than current processes. They have taken on $625 million over 8 rounds, and their latest valuation as of just last month is $1.6 billion. And there are no slouches in the investing group. In the latest round, you have Founders Fund, which is Peter Thiel's fund, Luke's Capital, A16Z, T. Rowe Price, Altimeter. Silicon Valley Venture Capital is excited. The numbers are making sense and everything's adding up. They are scaling extremely fast. In just 1 year of their scaling, they 10x'd their revenue. So they are on a tear. They're doing quite well. But their bet is that they can turn a massive problem in the US into software, which if you've been watching this channel for any amount of time, you know that we're skeptical about. So let's dig into that claim a little bit. Their main product that they sell, they're calling, in a cutesy way, factories as a service. So essentially what that means is if you're Lockheed and you have a part of your missile manufacturing process that maybe you outsource to a machining company, you need parts, you need people to assemble things with very fiddly tolerances to build the missile. They would essentially come to the Lockheed Martin factory, they'd claim a part of the factory floor, and they would install what they call a pod in part of the factory to do that bit of the manufacturing. So it's like a drag and drop little automation that you put into an existing factory. It's powered by their proprietary software stack called Opus, which I think Anthropic is probably going to have something to say about if they scale much more. And like I said, they seem by all accounts to be scaling quite well, but they do have a lot of long plays. Long plays are the norm in aerospace and in defense. They say, quote, 80% of our revenue is long-term, 3 to 7 year production contracts. So it could be a while before some of these things pay out. But like I said, that revenue trajectory is good. They did $3 million in 2023, about $30 million by the end of 2024, and they claimed 10x growth in 2025, but we don't have proof of that. And the biggest play, and the reason that I wanted to make this video in the first place, is right down the road from me in Mesa, Arizona. They just opened up Factory 3, which is a 270,000 square foot factory. It's $200 million investment. It's bringing 350 jobs to Arizona. And it's 4 times the size of their latest facility. So this is a big scale up for them, and it's unknown whether or not they can deliver on a factory of that size. Additionally, they plan for 4 to 5 more facilities this year. So they are going big in 2026. Here's where I put my I've been in these rooms and see how these decisions get made hat. First, let's take a look at the valuation versus their revenue. Again, these are on the best reported figures that we could find. We don't have direct access to their books. But they did a $1.6 billion valuation on $30 million of revenue, which is a 50x multiple. Now, that revenue figure is from 2024, so let's take them at their word and assume they did 10x growth. So they delivered on $300 million in revenue at that $1.6 billion valuation. That's a 5x revenue multiplier for a hardware company. And so I didn't really appreciate this until I worked in a hardware field. Those multiples for hardware companies are kind of unheard of. For software, we're used to infinitely scaling because all it takes to scale software is you buy some more cloud compute, you negotiate the price down once you're big enough with your cloud provider, you hire engineers that, yes, are expensive, but they're not as expensive as hardware. If you've never worked with hardware, you have no idea how expensive hardware is. It is a massive, 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 incomprehensibly large expense, and you have to build out factories to support it, which are also expensive because then you are very in the real estate game. So that's a big if true moment. That's a big multiple for a hardware company. The 10x faster claim, I do believe this one. I mean, racing against mom and pop manufacturing shops, it seems like quite a low bar. So I do believe they can deliver 10x faster. The real thing that is the question is, can they deliver with less anomalies or defects in their parts than these mom and pop shops? And I actually do believe that as well. I mean, we use robots for manufacturing a bunch of stuff, and especially fiddly things. We use them for surgery. So manufacturing robots for this type of work actually seem like they can deliver definitely 10x faster and likely with fewer production defects. There is a customer concentration risk, which is pretty interesting. A lot of their business is going to be coming from subcontracting for defense primes. So remember in that Lockheed example that I gave you, or with Raytheon or Northrop, basically what they're going to do is they're going to say, here's XYZ component of a satellite that we're building, and we want to automate this with Hadrian or a mom and pop shop. They'll go and find a mom and pop shop, or maybe they'll choose Hadrian for this, and they'll say, you manufacture this little widget that goes in the satellite. But the issue here, and you'll know this if you're a software engineer, these defense primes, they don't like to pay a lot of money to these subcontractors, which is probably why a lot of the mom and the pop shops are not cutting edge, fast, free from defects, is because they're not attracting top talent because there's not a ton of money in it. Again, you don't believe me? Go look at levels.fyi, look at the software engineer salaries for Northrop, for Lockheed, pitiful, laughable, humiliating. It's going to attract the type of talent that you get with those salaries. And that's everywhere in those companies. They don't want to pay their subcontractors a boatload of money either. I'm not calling them bad. This is just the mechanics of the situation. I want to call out just one more difference between software manufacturing and something that involves hardware, even if software is powering it. One of the reasons you can develop software so quickly that I can spin up a SaaS app over the weekend is because all the infrastructure exists. I can deploy on AWS, GCP, and they're all competing to make my life easier, to make my site more reliable when I host on their service. And I pay them a very, very small amount of money for the opportunity for me to host on one of those cloud provider platforms. But a ton of that is not legislated. There's not a ton of rules around where can you deploy, does your site have to work a certain way? But in defense manufacturing, you have ITAR restrictions, you have laws, you have compliance. There is a headache of paperwork. You need a boatload of lawyers to do this. So I'd be curious to know what Hadrian's legal strategy is for tackling these things, because the reason there hasn't traditionally been a lot of innovation in the defense scene over the past 30 years, other than a few newcomers, and now quite a few newcomers, is because there's a massive amount of bureaucracy involved. It tends to stifle innovation unless you have a good strategy for getting around it. But here's why this might not be vaporware. And I am actually rooting for Hadrian, and I do think they will be successful. As I mentioned, a lot of those manufacturing firms that your Lockheeds, your Northrops, your Raytheons rely on are going out of business. Those dudes are retiring. They're shutting down their shops. They still need those parts to produce defense equipment, to produce aerospace equipment. So if there's a case where nobody can manufacture your part but Hadrian, they have a lock on the market. They can essentially tell Lockheed to write whatever amount they want on that paycheck for that part because nobody else can do it. The primes are already starting to put some paper behind this. Raytheon actually invested in Hadrian's Series B round. And we know that Lockheed has embedded one of their cells, these small units of automated manufacturing already. Even a skeptic like me admits that the problem is so big and actually so obvious that somebody needs to step up and solve it. Hadrian seems well on their way to doing this. And my favorite thing about this is, unlike pure AI plays, which are sopping up most of the venture capital money right now and most of the headlines, Hadrian, yes, it's using AI at some level for optimization, but it's not their main product. They have a factory that you can go and tour. They have physical hardware assets. And honestly, if you're investing private equity and you can buy some shares of Hadrian, I think this is a really safe place to park your money. Not only safe, but I think that they'll see explosive growth over the next 5 years. So is Hadrian the real deal, or is it another VC wet dream about the reindustrialization of the United States? And I think it's real. The problem they're solving is real. The execution claims are aggressive, but seem doable. But we'll have to see, can they scale? And while they're scaling, can they maintain those quality requirements for the parts that they're producing? I'll be watching Hadrian's actual production numbers, not just their press releases, and I'll be reporting on it as we get new information. But this is one to watch. This is a bit of a deviation from the regular AI stuff on this channel. So if you like this and you want to see me cover more VC-backed defense companies, please leave a comment below and let me know you're interested in that. Drop some names of companies if you want to see me cover any of them. Thank you for watching, and don't forget to subscribe.